I'm standing in front of St. Paul's Cathedral in London, and what's interesting is that if you look at the structure behind me, what you can see there is two sides of the building, which are quite similar to a double top formation, which is a typical reversal formation we look for on charts to spot an end of a trend. And this is exactly what we can see on this chart. On the Bund chart here, you have an uptrend, then you have a top, the market goes down a bit, retests that previous high and fails and comes down again. And you can see that it is actually forming a shape similar to an M, the letter M as in mother. And this would be called a double top formation. Now you can spot these quite often on charts. I mean, here for example on a weekly Bund chart you have a very clear double top where you have an uptrend, market goes to a high, comes off again, goes back to test that high, fails here because there's too much resistance and comes down again. And this would be called a double top here. Again, we've got this M-shaped formation. And there's another one here, for example. You have an uptrend, a high, goes down, retests the high, and then fails. And it doesn't really matter if that high is slightly above or below the previous high. It would still be considered as a double top formation. And then the market comes down. So for this uptrend, this would be a double top formation. And again, you can see here, for this uptrend, we had a top, retest, slightly higher, and then failure. So double top formation. And basically what these do, they end the previous trend. The only problem is you might spot a double top formation like you do on this chart here, which is an S&P futures chart. Again, a high, retest of that high, and then failure. So that's an M formation. But what might actually happen in the future is that the market only goes down for a few days before rising again. And then it might form a double top, because you can see here again that that high is higher than this high, and we're again forming a double top formation. So the problem with a double top is you don't always know that this definitely means that the uptrend is ended. It might just be a pause in the uptrend before it continues to go up. Now, there are other formations, such as, for example, had you only looked at this uptrend, a triple top formation. You've got 1, 2, 3 tops, and then the market comes off. So this also exists, not just a double top, but a triple top. A chart pattern which is quite similar to a triple top is called a head and shoulders top. And this is what you can see on this weekly Standard & Poor's 500 futures chart. Back in 2007, we had the high of that uptrend from 2002 and 2003, and that was the beginning of the downtrend and the bear market we had until 2009. So what you can see here is this highest point would be equal to a head. Just imagine somebody standing now. This is the person's head. That's the left shoulder high, and then the right shoulder high. Now, they don't always have to be symmetrical. Ideally, they should be, but in real life, quite often they aren't. But what is important is you connect the lowest point of that left shoulder with the lowest point of that right shoulder. And when you do that with a line like this one, this is called a neckline. And once the neckline has been breached, you would expect the market to decline by at least the distance from the high to the neckline and project that distance downward from this breakout point. So you're talking target of down here, for example, where the market found actually support in the future before it really fell off its cliff. So this would be called a head and shoulders top formation. But inversely, what you also have is at the end of a downtrend, you can have an inverse head and shoulders formation. Now this one's far from being perfect, but you can clearly see that the lowest point is here in the middle. This would be the left shoulder, and this the right shoulder. So again, what you do, you take the highest point of the left shoulder, connect that up with the highest point of the right shoulder, draw in your neckline, and then once that neckline gets breached, as it did here, you would expect the market to go up by the distance from the lowest point, the head, to the neckline. So by about this distance here, which is what the market then did before it came off a bit and then continued its uptrend. So top formations can be quite useful to tell us that the previous up or down trends have probably ended, or at least that the pause in those trends is being made.